Well, hi, everybody. Welcome to today's webinar, The Proper Accounting of Case Expenses for Tax Purposes. Thanks for joining us. Today's webinar is brought to you by Advocate Capital Incorporated. Advocate Capital is based here in Nashville, Tennessee, where I'm speaking to you live from our studio. Advocate provides the AdvoTrack case expense funding service for about 500 law firms nationwide. If you want to know more about Advocate, visit advocatecapital.com. So joining me today, I'm very pleased to have with us a very prominent lawyer and expert in the area of tax law, and his name is Robert Wood. And Robert is very well published. We were speaking earlier. He's written over 30 books about taxes. He is a frequent speaker around the country, expert witness in tax-related suits and litigation. He also writes tax columns for Forbes.com and has been named by Forbes magazine to one of America's best lawyers. So, Robert, thanks so much for joining us today. We really appreciate it.
Thanks, Mike. Thanks for having me.
And you're speaking to us from San Francisco today?
I'm in my office in San Francisco.
Fantastic. We are receiving just monsoon rains here in Nashville, like 8 inches of rain this week. I don't imagine you have that problem there.
No, although we've had a much wetter winter than we planned, but today it's nice and sunny.
Awesome. Great. Well, I'm looking forward to being out there in April. I have some business, so maybe I'll drop by and take you to lunch.
That'd be nice.
Yeah, absolutely. So Robert's agreed to join us today to help us talk about our topic, which is the proper accounting treatment, actually tax treatment of case expenses. A quick disclaimer, this is an information-only webinar. It's not meant to be accounting or legal advice. If you're going to make changes or consider any of this information, please contact your legal and accounting professionals. So you might want to just send this to them, or you're going to get a link to a recording of this webinar via email in the next day or so, and you could always just share that with them and ask for their opinion about it. So today we are going to talk about the proper accounting of case expenses for tax purposes. But first we're going to do a quick review of a couple of key financial statements that you need to know about. If you're like most plaintiff lawyers, you have an undergrad in history or political science, sociology. You probably didn't learn much about business in undergrad, and then you went to law school where they didn't teach you business things. So we're going to be talking about these financial statements. I want to review them quickly to make sure that you're familiar with them, have a general understanding. So the first is the income statement. The second is the balance sheet. So let's talk about an income statement, also known as a profit and loss statement. An income statement covers a period of time, right? So it has a starting date and an ending date. It can be, it can last for a month, a quarter, a year, really anything you want it to. But the key is it covers a period of time. And on the income statement, I like to think of it as what you received minus what you paid out and what's left, right? But we don't call it that on the income statement. We call it income minus expenses equal profit. That's why we also call it a profit and loss statement, because it can be a loss, obviously, if the expenses exceed income for that time period. So that's a quick review of an income statement. This is a typical format of an income statement out of QuickBooks for a plaintiff law firm. You'll see income at the top, then the expenses, and then the profit at the bottom. Okay, secondly is a balance sheet. So a balance sheet's different in that it is a snapshot in time at a particular moment in time. It doesn't have a period of time, it's a snapshot. I like to think of it kind of a net worth statement, although it's not exactly that. If you think of net worth, it's what you own minus what you owe is net worth. We use different words for that on a balance sheet. We say assets minus liabilities equal equity. They're just different names for the same thing. A typical balance sheet is structured a little differently. Assets at the top, liabilities below that, and then equity at the bottom. I have a separate webinar. It's on advocatecapital.com/videos that talks about financial statements in more in depth. You can view that if you want to learn more. So I wanted to do that quick overview. So the question today really is, where should case expenses appear on your financial statements? And Rob and I had a chance to talk about this a little bit before. I tend to think in terms of the financial statements. Rob's a tax guy, so he kind of had a good spin on that, or a good take on that. Rob, where do you think case expenses should appear?
Well, so I mean, we do, and Mike, as you say, we do view it somewhat differently. For lending purposes, certainly you got to look at a financial statement. You got to know what the position of the law firm is,
Right.
or the solo lawyer if it's a solo and not a law firm. I think about tax, and I guess because my interactions are not about financial statements, but rather about tax returns.
Mm-hmm.
So I think from a tax viewpoint, it's unfortunately, because no one's going to like the treatment, it's really clear what the IRS wants you to do with case expenses, which is not to deduct them. But from a financial statement point of view, I think your comment was it's an asset.
Yeah. Right. So I do tend to think in terms of financial statements, like you say. I've been reading the tax returns and the financial statements we all have here at Advocate every day for the past 20 years. But I think you make a good point. So if I was a plaintiff lawyer, I would put my case expenses on the balance sheet because that's also the right treatment for tax purposes, right? So can you talk a little bit more about the background of that, maybe about PLR 8246013? I'll put a slide of that up.
Sure. So, I mean, the basic rule, and as I say, I don't think I've ever met a plaintiff's lawyer who, and I represented and represent many in law firms on the plaintiff side. I don't think I've ever met anyone who likes this rule.
Right.
And I think some people, as we might discuss, ignore it. But the IRS view, as this private letter ruling says, is that that amounts that you're paying for FedEx, for travel, for deposition costs, for expert witness fees, all of these things that it would be nice if you got a client to pay for them, and some lawyers are able to do that. But I think the trend in the industry is the lawyer basically has to lay out money for all those things until the case eventually is resolved. And at that point, essentially, the lawyer is, I guess you could say, paid back for these things.
Yeah.
And that's the key to what the IRS says, which is you really are not, even though you're writing a check to FedEx every month and many other bigger expenses, the IRS says these are not your expenses, and therefore you can't deduct them, even though you're paying them. You got to wait and treat them as a loan and account for them at the end of the case. That's what the IRS wants.
Yeah, absolutely. It's kind of a double whammy. Not only do most plaintiff lawyers have to advance the expenses on behalf of their client because, who else is going to do it? The client typically can't do it. They're really, according to IRS, not allowed to expense them. So when I talk about them appearing on the proper financial statement, I think that flows through to your point, which is really what ultimately the IRS cares about is how they appear in your tax return, right? That's ultimately what matters. You could do them wrong on your financial statements and right on your tax returns. I typically find them matching as we look at law firms' financial statements. I think that roughly half of the law firms that apply with us are doing it, I'll say, wrong, in that they are listing those expenses on the income statement. And then when we look at their tax returns, they tend to mirror that. So ultimately, you're right. What matters is what's on the tax returns. If I was a plaintiff lawyer, I would want to see my case expenses on my balance sheet for another reason that doesn't have to do with tax. And it has to do with just knowing the metrics of your business. I would say half of the plaintiff lawyers I speak with, when I ask them how much they have out in case expenses, they don't know. They actually just don't know the number because it's on their income statement. They just see a monthly number. Let's say, well, I spend about $20,000 a month. Well, I'll say, well, how much have you invested in your current cases? And they don't know because really not tracking on their balance sheet. So if I was a plaintiff lawyer, I would want to see it on my balance sheet so I could glance and see how much of my after-tax cash have I loaned to my clients. And I think that's another motivator. So if you don't do it properly from a tax standpoint, there are huge implications, which we'll talk about in a minute. But just in terms of managing your business and knowing how much you have tied up in your business, and is that fluctuating? Is that going up or down? You're not able to spot trends as easily. So that's just one of the observations, more from a practical standpoint.
Actually, it's a great point. And of course, even though I'm sort of saying I don't care as much about financial statements, of course you're right that if you set it up properly from the beginning, then when you get to tax return time, hopefully you're going to do it correctly.
Yeah. exactly. Well, let's talk about some of the. So I talked about one little implication of not having case expenses on the balance sheet. Can you tell me about what kind of risks a law firm is running if they're expensing their case expenses?
Yeah, sure. And I'd say my experience, I mean, I don't have any real, just sort of the episodic things that I've seen.
Right.
But my suspicion is that there, you said half, I think that's probably fair. I think there are a lot of people, a lot of little law firms and probably some big law firms that are expensing and doing what I have to say is an awfully common sense kind of thing to do, which is if you're writing a check to FedEx or to the depositions transcribing service or whatever it is,
Sure.
It's an expense, and you think just like paying to keep the lights on in your office, isn't that something you deduct? And so I think a lot of people go along with that common sense view, but unfortunately it's wrong. So, so if you are doing it wrong, and I've represented people who are doing it wrong and who voluntarily fix it, or who get caught, so to speak, who get audited by the IRS. That's probably a larger number, honestly.
Yeah.
But nonetheless, voluntarily fixing it is a good idea, so that you don't get caught. But the risk is the IRS disallows the deductions, and there's not much of a defense, honestly. It's sort of about trying to ameliorate the penalties and trying to stretch out the adjustment. Sometimes you can do that. But as I say, the IRS is pretty firm about this, and the court cases suggest that the IRS is right.
Yeah, they're going to win, I think.
Yeah, absolutely. Unfortunately, they're going to win, and the IRS. I mean, the history of this dispute is a fairly long one, and between plaintiffs' lawyers and the IRS, with one notable exception, the IRS wins all the time.
Yeah, yeah, absolutely. So, how many years can they go back and disallow deductions?
So, it sort of depends. I mean, the general audit period is for a tax return for an individual or a business is 3 years. So 3 years after filing.
Okay.
Yeah, I mean, that's the general answer, and the one that's mostly applicable here. You should know that there's also a 6-year statute of limitations that they can use sometimes, but I'd say most often, if they're going to sort of catch you, it's 3 years that are going to be at stake.
Got it. So if you've spent $100,000 a year for 3 years, and you've expensed those, if I understand this correctly, and I'm not an accountant, right? They could say, well, those $300,000 should not have been expensed, so they disallow that. Right. So now you're roughly going to owe taxes on that amount of money.
Right. Yeah, and they add interest, of course, and they add almost all the time they add penalties.
Yep.
Penalties are something that you can often either avoid or negotiate or something.
Right.
But interest and the taxes are not something you could get around.
Yeah, and here's something we see from a practical standpoint. We have law firms come apply with us. We take about 25, 30 applications a month. And frequently there's a federal tax lien out there. And if you have a federal tax lien, it's going to do some challenging things to you and your law firm. If it's on you personally, especially, it's going to dramatically affect your credit score. It's going to affect your relationship with your existing or future lenders until you get that resolved. And we have had to coach law firms for 1 or 2 or 3 years to finally get that paid off and that lien released before we can do business with them. So there are practical implications beyond just, hey, I have to pay this money. Most law firms are not going to have, in my example there, extra $100,000 laying around to write a check to the IRS, so they end up with a lien. So
no, that's a great point. And now, and of course, it's the tax lien may well have nothing to do with the case cost issue. It may be regular income taxes. Yeah. It may be taxes from payroll taxes. But as you just noted, I mean, and I spend time with lots of clients, and unfortunately, on tax lien issues. I mean, no one wants a tax lien. It's a public filing.
Right.
Everybody can find out about it. Everybody can know about it. And no matter who you are, it's a little embarrassing. And you will get, at least I find, clients get, phone calls and, emails and solicitations from people, offering to fix it. And a lot of them are, kind of bottom feeders, frankly.
Right, right.
It's not a good position to be in.
Yeah,
I agree.
absolutely. Well, let's talk about, I'm going to put this on the screen. One other matter, I guess I'll call it, it was a case. It was called Boccardo v. Commissioner. I'll just briefly put this on the screen. It's really not legible. If anybody wants a link to this case, just contact me. I'll send it to you. So Boccardo v. Commissioner, I think happened in the Ninth Circuit. Would you mind explaining what the significance of that case for us?
Sure, and I'd say this, speaking of links, I didn't think to do this, but after the webinar today, Mike, I will send you a couple of links. You may have already seen these, but a couple of articles that I've written on the issues, and you can disseminate them if it's helpful.
Great. Yeah, I'll tell you what I'll do is I'll put them in the when this goes on YouTube and Vimeo, we'll put links, Rob, to those articles right below this so people can access it directly.
Okay, great. So, and not to get too deep into the weeds, because I guess as a tax lawyer who's followed this for so many years, there are three different, as I recall, Boccardo cases. You got to say, and I'm not sure if Mr. Picardo is alive anymore, but he was, and it's the law firm still around. Prominent plaintiff's lawyer in San Jose, I think, California. And he basically took on the IRS over what I have to say many plaintiffs' lawyers agree is an unfair treatment, this loan treatment. And he, I think, I forget the order of the cases that I have loosely called Boccardo 1, 2, and 3. But eventually he beat them, and he did it really by persistence. But and it's only in the Ninth Circuit. The IRS has always hated this case. The IRS has always said they would never follow this case anywhere but the Ninth Circuit. So it literally only is for Ninth Circuit lawyers, but it essentially says that if your fee agreement is done in exactly the right way, we can talk about that in a moment, then you can deduct your case expenses. So it's not a get out of jail free card at all. It's only in the Ninth Circuit. The IRS hates it, and you got to do a fee agreement just so.
Right. So I've created a slide on that. I hope you can see now. It talks about a gross versus a net fee contract.
No, and the slide is great. That's a really good simplified way of saying it. I would have to say, having represented lots of lawyers inside and outside the Ninth Circuit, again, you can really only do this in the Ninth Circuit. And in the Ninth Circuit, my experience is very few lawyers want to do a gross fee contract. It's, to me, and this goes back, Mike, to your financial statement point, it's sort of crunching the numbers and knowing your cases and how much you're going to spend and how much you've been expending on the costs. Because, are you willing to say, we're just going to adjust the percentage, but I, as the lawyer, am going to eat all the fees, all the expenses. I mean, that's what a gross fee contract is. And if you do that, then and you're in the Ninth Circuit, you could rely on Boccardo.
Okay, so and unfortunately, we're having some technical difficulties over the internet across the country here. So I think you may have dropped out a little bit there. So Boccardo may be used, if I understand it, if the law firm is using a gross fee contract. Is that right? That's right. Okay, so that's where the attorney will only recover a set percent of the gross, not the case expenses? That's right, yeah. Okay. So, yeah, I mean, in other words, most lawyers, I mean, there are variations of this, obviously, but most law firms have a sort of system where if the 100% of the money comes in, $100 comes in, first they take costs off the top, and they split the balance. That's the most common. That doesn't work, I mean, that still has to be treated as a loan anywhere in the country. Got it. That makes sense. So Well, great. Thank you for that, because I know I actually have some clients who've mentioned Boccardo, and it reminds me to maybe remind them to ask their lawyer to look at their fee agreement to make sure that if they're going to hide behind Boccardo, they need to be doing the gross fee and not the net fee contract.
Yeah,
Great.
no, you're right.
Yeah, absolutely. So, so you have had some clients who make the switch from expensing expenses to case expenses to moving to the balance sheet. You've helped some law firms through that.
Yes.
What are some of the challenges when they go through that process?
Well, I think again, there's a difference between voluntarily doing it and sort of getting audited and having to do it.
Right.
But some law firms will see. I wouldn't say it's a terribly challenging process. I mean, nobody likes it because it's paying money, but it's. But I mean, my memory, I mentioned adjustments, is I think you can treat it as a partial change in accounting method and adjust. And I think there's a way of, again, you're still paying interest, but paying it in over several years. But I think the main challenge is simply, adding up what the case costs have been that you did deduct, and then sort of reversing those out. That's really all there is to it.
Yeah. Great. Fantastic. Very, very good. Well, again, today's information only webinar is not designed to be accounting or legal advice. So we're going to open up for questions here in just a moment if you have some questions for Mr. Wood or myself, but please get your own legal and professional accounting opinions before taking or not taking any action. We don't want you to rely upon the information here. This is designed to get you thinking about this. You may have never even noticed. You should call your CPA and say, hey, how are we doing this? Take a look at your income statement. Do you see case expenses there? You should ask some questions of your accounting team and how we're doing that. And as Rob mentioned, importantly, then follow through and look at your tax returns, because that's where it could get you in a lot of trouble. So terrific. Well, in your webinar dialog box, all of the attendees have a little questions field, which you are welcome to use now. If you have questions for us, don't be shy. It's anonymous. We're not going to tell anybody your name because I can't see your name. If you have questions, maybe about the Ninth Circuit, about Boccardo, about 824-6013, while we're giving you a chance to type some of those in, you will receive a link to a video of this webinar afterwards to share it with your accounting and legal professionals, or maybe your law firm partners, or your boss if you're an administrator watching this. I want you to know that well, here at Advocate, we believe in what plaintiff lawyers do. So if we can help you do something better, let us know. I did notice a few clients are watching today. Thanks for joining us. And let's see if we have a question or two. Okay, here's a question. What does this have to do with Advocate Capital? Okay, that's a good question. And why are we talking about it? Yeah, it doesn't really have anything directly to do with us or our product. It's an indirect impact, right? Whatever helps our customers helps us, right? So if we can help them do something that lowers risk for them, is better for all of us, right? So a rising tide lifts all boats. We do have clients who have come to us when they decide, as Rob mentioned, to voluntarily make a change, because that can be a little painful cash flow wise. You're going to start paying taxes at the appropriate time and the appropriate rate. And so we do have clients who came to us and said, I want to come aboard now to help me lessen the pain, the cash flow pain of this, right? They fund their case expenses with us and use that cash to help them get through that transition period. We don't dictate one way or the other to our clients that they should do. They should follow their own lawyers and accountants' advice. But we've seen enough heartache out there over the years of folks who waited until they got caught and then get in a pickle. And it's hard enough to run a contingent fee law firm. If you're going to try to run the law firm and deal with the IRS at the same time, let me tell you, you're going to take your eye off the ball for a while, and it's going to affect you in a lot of ways. So see if we have any other questions. I think we have another one here. Hang on, if I can get to it. Okay, do you count the case expense reimbursement as income on your statements, on your Schedule C? Okay, do you count the case expense reimbursement as income on your Schedule C. Rob, do you want to take a shot at that?
Sure. So a Schedule C, of course, is a proprietorship schedule. So it would be a solo, for example. And a Schedule C would be listing income and expense. Do you count it as income when you get it reimbursed for it? It's sort of it's an interesting question. The answer generally would be no. However, when I answer no, I'm sort of presuming that you've done it in the right way, meaning that you haven't been deducting it. I think the way you ask the question suggests that you have been deducting it. And so if you did deduct it 2 years ago when you paid FedEx, and then 2 years later when the case settles and you get reimbursed, as you put it, actually it would be consistent to include it in income then. I don't know. I don't think I've ever seen anybody do that. I don't know if that's a way of sort of ameliorating the fact that the IRS would say you're doing it wrong. I'd have to think about it, but I mean, I follow the logic. But as I say, the IRS answer would be sort of it was wrong to begin with.
Yeah, I tend to agree. And looking at law firms' financial statements and tax returns, what we tend to see is that if a law firm is expensing their case expenses on the income statement, in the expense section, right, they are also typically including their reimbursed expenses later as income. And my take on it is, well, you might think that's just balancing it out and that's all good. It's still, from what I can tell, is not compliant with 8246013, because that says it shouldn't be on your income statement to begin with, and on your tax return in your expenses. So if it shouldn't be in your expenses, it shouldn't be in your income. Although we do see law firms trying to, I guess, ameliorate, as you say, Rob, that situation. So it's hard to answer that question because.
Yeah, no, I think you said it. I think you said it better than I did. I think that's exactly right. And I don't know whether you're making it by doing that, less likely or more likely to come up in an audit. But
yeah, right. Well, we have another question, Rob. Here it is. If you represent indigent clients and are paid by the state for working on the case, that is just considered income, right?
Correct.
Okay, good. A one-word answer. That's it. We like those. Okay, here's another. Can you please do one more example of what you are supposed to do with concrete numbers? Do you want to try that, Rob, or should I?
Why don't you? But before you do,
Okay.
just say something I should have said before. When we talk about Boccardo in the Ninth Circuit, and Mike, you actually reminded of me of this earlier today. So when we talk about Boccardo in the Ninth Circuit, everybody should know that in the big tax bill that passed a year and a few months ago, the very end of 2017, so it took effect in 2018, lots of big tax changes, some good and some not so good, about treatment of lawyers' fees to clients, for example. But one of the things that Congress was going to do, it was in there and then it got taken out at the last minute, was to essentially reverse Boccardo in the Ninth Circuit. Again, this is only impacting, but it basically said nationwide, it was going to say the rule is you can't, if you're a plaintiff's lawyer, you can't deduct the fees or basically the expenses are a loan. That provision did not pass. So, but you should know that the IRS and Congress are eventually, I think, going to eliminate Picardo even in the Ninth Circuit.
Yeah.
Sorry, go to the example.
No, that's a great point, because you're right. It was a last minute change that struck it. It was in both the Senate and the House versions of the bill that matched. And it was really some last minute lobbying, I believe, by AAJ and others that got that stricken. So I think, like always, unfortunately, there's a bullseye on plaintiff lawyers' backs, and I don't think this issue is going away. So concrete example with concrete numbers. So if you were to write checks for case expenses throughout the month, generally speaking, instead of recording those as an expense and having them show up, being deducted from income to determine your taxable income for the month, what you'd want to be doing is adding those dollars to an asset account on your balance sheet, adding them to that asset account called case expenses or whatever you want to call it, and you'd be increasing the value of that asset, right? So an asset on the balance sheet is something you own, so it has value. So those dollars you've invested have value in that they're going to come back to you most of the time. So that's where you'd also put a loan. If you made a loan to somebody, it would appear on your asset section of your balance sheet, something that you're owed or something you own of value, which is a liability owed to you. So as you would be spending money on case expenses, you'd be increasing the value of that asset. And then as you recouped case expenses at the end of a case, very simplified, you'd be then taking that cash and writing down or reducing the value of that asset. So every time you had a case expense transaction, it's obviously on the cash side of the ledger as well, but you're going to be increasing or decreasing the value of that asset. And that asset is the money that's owed back to you from your cases. Now, if you were to have a case you lost and you're not getting the expense back, what you do there is you would actually expense that on the income statement as a bad debt expense, right? Because that's a debt you're not going to collect now. Then it becomes an expense. That's very simplified. Run what I told you past your accountants to make sure what I'm saying to you is accurate. But that's kind of a general sum. Do you want to add anything to that, Rob?
I would just say to make my sort of tax return focus even more clear, I would just say, apart from the accounting treatment, and I think, Mike, you're right, essentially, if you are hoping that you're eventually going to get $100 out of this case when it eventually settles, but it takes you $30, I mean, this is a silly example, but it takes you $20 or $30 of case costs that you have to lay out for a long period of time, several years perhaps.
Yeah.
And you're spending that money and you're, laying out the cash to keep FedEx delivering, but you can't deduct it. I mean, this is what the IRS says. So basically you hold that expense and you can only deduct it, 2 or 3 years later in some cases when you actually recover money.
Yeah.
And at that point you sort of settle up with the client, you settle up with the IRS, so to speak, and that's what you're supposed to do.
Yeah, and that's when you get that cash back, that expense money back from the case, that's when you would reduce that asset on your balance sheet by that dollar amount that you got back. So that asset would go up and down over time, depending upon what you have invested in existing cases. We have another question, and it's a little lengthy. I'll do my best here. How do you handle the reimbursement if you've been handling the expenses correctly, entering them as client loans in QuickBooks? I have just been entering them in client loans, which essentially zeroes out the balance. Is that correct? And what about for expenses that aren't reimbursed? For instance, I might decide to waive a reimbursement of a meal expense as a matter of fairness, or if a client objects, can I recategorize them as a meal expense? Well, I tell you what, I'm going to ask that the asker on this question, if you wouldn't mind reaching out to me, I'll give you my email address in a moment. That's fairly complicated. Rob, if you want to take a stab at that, I think I might want to have you speak to one of our, we have QuickBooks Pro advisors on staff here at Advocate that will speak to you for free. That seems like it's a little bit more of a bookkeeping question. Rob, did you have any thoughts on that?
Yeah, no, I think that's right. But I would just address the very end part of that question, I think, which is, if you can you recategorize, or can you say essentially that you're not going to charge somebody for something? The answer to that is yes. And I think documentation on something like this can sometimes be a problem. In other words, can you sort of track it and figure out what happened and when you bore the expense? But if you as a law firm are bearing an expense or agreeing to bear an expense, then it's your expense. So the answer would be it's an ordinary and necessary business expense, and the answer would be you deduct it then.
Great. Well, thank you for that help on that, Rob. On the QuickBooks or where to enter things, we're happy to help. We'll do it for free. Reach out to me. You can find me via the Advocate Capital website. You can link to me there. I'm going to give you my email and phone number in just a moment, and we'll be happy to put you in touch with one of our QuickBooks Pro advisors that might be able to help on some of those more practical bookkeeping questions. Okay, some great questions today. Let's see if we have any more. Doesn't look like it. We'll keep an eye on that, though. So, Rob, do you have any questions?
No, I think that's right. And I think documentation on something like this can sometimes be a problem. In other words, can you sort of track it and figure out what happened and when you bore the expense? So the answer would be it's your expense.
Right now on the screen, you'll see Rob's contact information, his website, his phone number, and how to contact him via email. And so, feel free to do that. If you need to hire a lawyer to help you, I can't think of a better one to do that in this matter. He's who I would call for sure. This is my contact info. As I mentioned before, reach out to me if you have further questions. For that last question on the detailed bookkeeping, just shoot me an email, and we're happy to link you up with one of our trainers here for free. More information about Advocate Capital at our website. We have other webinars available at advocatecapital.com/videos, or go to our webpage, click on videos at the top, and you'll see a lot of other what we hope are helpful and useful videos there. So looks like that's all the questions. Rob, thank you so much for being here today.
No, my pleasure. Thanks for having me.
Yeah, or I should say being there, right? It's more fun in the sunshine.
True.
Yeah, it is just buckets here. It's kind of causing some flooding problems, so we're hoping it tails off soon. But anyway, thank you all for joining today. Stay tuned. You'll get a link to a video of this here in the next few days. We invite you to join us for next month's webinar. There will be a link sent to you on that. And next month's webinar is going to be 7 important IT changes you can make to protect your law firm from hackers. So stay tuned to that. We're going to have Don Bayham, who is the president of KTG here in Nashville and does our IT, and he's fantastic. And you'll learn a lot of good practical tips about protecting yourself from things like spear phishing and all these nefarious things that are flying around the internet. So stay tuned, and thanks for watching.